Welcome back to the Krown crypto channel, and a special day today as we're going to be going over another Skill Saturday video for the Fibonacci retracement tool, or Fibonacci sequence in general, how you can kind of use these things to get areas of interest, generally speaking, on price action, and then also even input them into special settings for other indicators that you might find useful as well. Anyways, being that it is a Skill Saturday, I do want to let you know that if you have any other sort of tools or indicators or whatever that you want to have expounded upon, please put them in the comment section below so that I know what you want to see, because that's how I got the idea for this video actually. And then of course it also assumes that I know that tool well. If I don't know it, I'm probably not gonna make a video on it. So if you want to have the fucking whatever the hell random indicator, because there's millions of them, a big video on that, maybe I can't do that. Probably I can't. Anyways, so let's just get into it. First things first, what is Fibonacci? Fibonacci is a sequence of numbers that is found very commonly in nature, and it's just one of those things that we don't really have a good explanation for it. It just continues to show up. You see it in many different things. You see it in the way that a flower petal is kind of aligned across its seeds or something like that. And then you also see it even in trading. You see these sort of Fibonacci levels respected a lot, and you see it even in the ratio of what is a perfect body. Actually, the golden ratio actually holds up there from I believe Greek philosophy. Their sort of idea of the ideal body has to do with a measurement specifically based around the 1.618 number that relates your hips to your shoulder ratio and blah blah blah, and that's supposed to be super attractive. Anyways, I know less about that, but what I do know is that the Fibonacci sequence is as follows, and you can find this, by the way, just by simple Google. It's 0, 1, 1, 2, 3, 5, 8, 13, 21, 34, 55, 89, 144, and so on and so forth. The way that you get the proceeding numbers, once you get to 144 here, as it doesn't go further than that, is you just take the prior plus the current, so that'd be 89 plus 144, and that's 233, and then you do 233 plus 144, and that'd be the next one, and again, so on and so forth. It goes on for forever, I guess. I actually don't know. And then of course what we also want to know is, and what you're probably more interested in, because this is where you've probably seen it a lot of the time, especially if you watched that video with Fiboswani, is you're probably interested in the fib ratios. So the fib ratio is gotten. I don't know if that's the right terminology. English is my first language, my only language, and also not my best one as well. But you get it by taking the prior number divided by the preceding number. So the big ones there are the 382, the 618, and the 782. You might even say the 236 as well. I think less so in trading, but it does show up here and there. And technically, all of them have some merit. But if you plot all of them, then you're just going to have lines all across your chart, and then you are not going to be that effective because you're going to be stuck in analysis paralysis and thinking that every little damn thing matters, and maybe it does, but it's probably not that helpful as far as actual trading goes. All right, sweet. So we've gone through that now. Let me just check my notes to make sure that we are on target here. Yeah, okay. And then also one of the things just with the Fibonacci sequence, just so you have the knowledge, whether you give a fuck or not, is that you get you can also get these numbers just by multiplying them by 1.618. So that is the big one, the 618 basically. So if you were to take these numbers, roughly 1.618 times these numbers would equal the next one. So that's another way of doing it, of course. Anyways, okay. So we've gotten that. Why Fibonacci? Well, for why Fibonacci, we can just go into the Jesus Christ. Apologies on that. Very annoying. So why the Fibonacci? Well, here's the thing. Like I said, it's one of those things that shows up in nature, and we don't really have an explanation for why. It does, and it seems very appealing to the human eye. And do I have a very philosophical or hard definition as to why it works? No, I don't. My main point is that it just seems to work, which is the most interesting thing. So for example, if we go in over here, I haven't even looked at this price action and done this just yet, but let's say, maybe let's go to a daily first. maybe let's go to something that's also a little bit more interesting in terms of like what's actually going on. And let me get rid of all of these. And yeah, maybe back here, this is probably more interesting. We can go back to this segment of price action right here. And if we put on a fib tool and we actually do it properly, then we can see that the fib levels are respected pretty damn well. You can see from the ultimate high to the ultimate low of this cycle, we had a nice ceiling or resistance right around the 382. We saw a nice base around the 618. We saw a big break below the 786. And, well, these were major areas of interest going onwards and forwards as, of course, Bitcoin did respect them on the way back up, as you can see. Big breakout above here, big breakout above here, and big breakout, and then subsequent top around there as well. Anyways, that brings me to my next thing, which I completely forgot. Where do you find this tool? It's on the left-hand bar. Now that you can actually see it on my computer, let me bring you over here. Yeah, there we go. You can see it right here just by pressing the out arrow, and it's the first one, Fibonacci retracement. I've formatted mine so that it looks a little bit more appealing to my eye, and also taken away a lot of the other numbers that I think just don't really help. And so the way that you can format it is, of course, double click on the tool once it's on your screen, and there you go. It'll bring up this pane, and you don't need to do it exactly how I'm doing it right here, but generally always want to see the 382, always want to see the 618, which is the golden ratio, and it's the one that people tend to talk about the most. And then I do find that the 786 works quite well as well. Where even is mine? Yeah, here it is, right here. So those are the ones that I have ticked on for like the current retracement, and then also the 50%. But the spot 5 is actually not a Fibonacci number. At least I don't believe it is. It's a 50% retracement, which does hold a lot of merit in and of its own regard, and so I have it on there always as well. And then I do the extensions here too, so you can see you can just add a number in front of those. For example, 1 spot 618, and that would give you an extension. And these numbers typically get respected as well. In this case, you can see the 1 spot 272. Hey, what do you know? It's right there. The 1 spot 618. Hey, it's relevant right there on this consolidation. Interesting. Even the I was going to say 2 spot, but just the double right there. Coming in around this level, which was a big breakout level back on over in February of 2016 as well. So anyways, I digress. All right. So we've gone through that. Now, here's the thing. Many people ask, how do you actually draw this? Actually, before we get into how you draw it, I do want to talk about a particular setting for this. So if you double click onto it, then I want you to scroll all the way down here to fib levels based on log scale. I find that for Bitcoin specifically and most cryptos, because they move in such a large fashion, they move in X's rather than percentages compared to like stocks, for example, this is actually the better way of doing things, especially if you're going to be looking at long-term price. For example, on Bitcoin, when it goes from 2,000 to 20,000, it's going to make a lot more sense to have fib levels based on log scale. Does it also work without it? Yeah, it does, but it's not going to be as relevant to your interests most likely if you're looking at long-term stuff. If you're looking at shorter-term stuff, yeah, you can keep it ticked off. But in general, when it comes to cryptos, I will always have it ticked on. If we're talking about stocks, if we're talking about commodities, maybe not. Forex as well, maybe not. But then again, if you're looking at very long-term price action, usually it's going to be the better way of doing things. Anyways, so now that we've gone through that, the next big question that I always get is, first, how do you know where to draw them? And then second, what direction do you draw them? So I'll answer the second question first because it's the more important of them. Because if you're not drawing them in the right direction, then you're not doing shit. So how do you know where to anchor your points for the Fibonacci retracement? Well, here is the rule of thumb. If you can remember this, you'll never get it wrong ever. And it is this. You start in the same direction of the current trend. So if you're looking for an uptrend, you start at the low and you end high. If you're looking at a downtrend, you start high and you end low. That's it. That's it. That's all you need to remember. That's all you need to fucking remember. So hopefully I don't get this goddamn question ever again. No, of course I will, but it doesn't matter. And it's a harmless question anyway, so I don't know why I'd get even mad about it. But for example, right here, we have an uptrend, right? Here's your low, here's your high. What direction do we draw it in? Where do we start? Remember? Low to high. If it's an uptrend, we go from low to high. There we go. So we start low, we have our first anchor there, we end high, we end right here. And do I still have log scale on? I should. Yes. Okay, that's good. And as you can see, these levels generally respected on the way up. And of course, because we drew this, we would have theoretically drawn this when price action, was at the high right here. It's then relevant, more importantly, on the way down, because obviously we didn't know that it was like, it was in progress right here. Although we probably would have if we drew the prior Fibonacci from this high to this low, getting the bearish retracement. But going onwards, we can see, what do you know? The 382 getting this consolidation right here. The 50% getting this low right here before the breakdown. The 618 getting this low right here. Again, respected many other times in this consolidation. And the 786 getting the low of the overall consolidation before the big bad breakdown of 2022 below about 40,000 bucks. And I'll just kind of demonstrate the prior way as well. So let's say that we saw this whole rally right here, right? And then we saw this subsequent fall from April 2021 to the lows of summer of 2021. Well, we'd start high and we'd end low, right? And what do you know? Well, we do see that these levels are generally respected yet again. Getting these consolidations doesn't need to be perfect, and there is some more nuance with this, which we'll get into a second. So here's the next thing that I'm sure I'll get a question on, or that you might be wondering: how do you know whether to use the wicks or the candle bodies? Well, you actually don't. It depends on what you want to do. If you are looking at closures and you're making decisions on closures, then you use the body. And generally speaking, that's going to have a higher degree of actual merit when it comes to breaking those levels, on a closing basis. But if you're scalping, for example, you probably want to know where the wicks are, because the wicks are where, the more extreme price action comes in around, and you have some scalping opportunities around these regions, of course. And you can see several within this area right here if we go off of the wicks. Now, there's also another nuance with this. What if, or I'm sure you've seen people not use the high or the low of a current trend. Okay, fair enough. There is merit to that, actually. You could, some people would say that you shouldn't take the retracement until you have that first lower high on this reversal right here. So we'd start right here and then we go to the low, right? And what do you know? If we draw it this way, does it still hold some merit? Do these lines still match up with pivots on price action? Absolutely. Absolutely they do. Or actually, it should be a little bit lower, but there we go, even better. Yeah, absolutely they do. Again, they're not going to be perfect, but they're going to be pretty damn close, and gives you a generally good guide as to what to be looking at. And of course, you can draw multiple within the context of an ongoing trend. So in this case right here, if we start low and we end high, on this first trend right here, it's like, hey, okay, Bitcoin pops back down after hitting this high, basically tests the 50%, and then rallies back up after, and especially after it reclaims that 382, it's literally straight up. It's literally straight up. So that also holds its own merit. You don't need to get like the ultimate high to the ultimate low. It just depends on like what you're trying to look at. If you're trying to scalp a more more short range, then sure, like just go off of that shorter range. So we could do something like this right here, right? We could go boom and boom. And then what do you know? If we actually look at this and I do it properly and go off of the closures, because I'm using closures in this case, we can see that the extensions also correlate with areas of interest. The one spot 272 gets this little consolidation right here. The one spot 618 gets basically the consolidation at the high, and the two extension gets literally the high. Interesting, right? Anyways, yeah, so many different ways to do that. Many different ways to skin a cat. Not to harm any cats out there, but you know what I mean. Anyways, okay, so we've gone through that. What else do we want to go through? Yeah. How about this? Okay, so we went over fib numbers earlier, right? 1, 2, 3, 5, 8, 13, blah, 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 21, 34, 55, blah, 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 blah. I prefer to use a lot of these numbers as inputs and other indicators. So if we go over here, for example, where I have my exponential moving averages, you'll notice a lot of the time I will have Fibonacci numbers. Well, I don't know why I have a 3 right there, but it should be 9, which is also not a fib, but 8 is. But 21 and 55 are two big ones for me. 21, 55, 233/200, very close to each other right there. And these numbers, do seem to, they do seem to, in general, have some interesting interplay with a lot of inputs for indicators. So it could be moving averages, could be momentum oscillators, could be whatever. You can play around with these things and just see, like, does a 21 period, for example, seem to line up rather well? Does a 5 period seem to work well? Does an 8 period seem to work well? Does a 13 period seem to work well? A lot of the times you will see those numbers pop up as interesting when it comes to the context of looking at indicator settings. So definitely something to play around with there. Anyways, I think that is about where I want to leave off on this video. And I'll leave you with this. So if you're interested in Fibonacci's or Fibonacci numbers and a system based around that, I would strongly recommend to check out my man, Fiboswani. He is a guy who's been playing around with fibs in his own system for over 20 years. I do not use Fibonacci retracements in the way that we looked at them here in any of my systems, really. I think that they're interesting. I think that they hold merit, but I just don't really use them in my actual trading. It's kind of hard to automate them, really, is the bigger issue. But he actually has a really, really interesting system. It's tried and true, and I would say that he's got to be one of the leading authorities on, Fibonacci in trading. I mean, if you've been doing it over 20 years, there's really not too many other people who are going to be on that same level. And if they are, then they're of the same level, right? But yeah, he uses them in a very unique way, not exactly the way that I use them here. He has a very specific theory with regards to using threshold levels on the RSI oscillator and Fibonacci sequences based around that. And so that's also something to explore, but something much more advanced than a simple YouTube video like this one. But, even just using it in the way that we showed here, you'll probably have some good mileage with that. And almost always those fib numbers will match up with important areas on price action. And it's generally good to be aware of where they are, just in the greater scheme of things. So I think that's a good place for me to be leaving off on this particular video. I hope that this one finds you well. Go ahead and use your Fibonacci tools and sequences and play around with those numbers, and who knows what the hell you might find. Maybe some treasures around the TradingView land, if you're as nerdy as me when it comes to this shit. So I'll leave it off right there. As always, I want to wish you the best. Take care, much love, and see you hopefully soon.